All right, so again, today we're going to talk about the weekly market overview for July 2019. And I'm going to give you guys a chance to kind of start to practice creating your own data sheets. In the group there, you guys should have seen a message come in with a blank data sheet. What you're going to do with that, you're going to go to Trading View. Go come down to the bottom of Trading View, Text Notes, click on Text Notes. Then you're going to click on New. Then the only thing you're going to do is paste. Okay, copy the headline like this, put it up here. So let me do that. Then you can delete this phase of it and this stuff here. Boom. So that's the beginning of our data sheet. But before I get into that data sheet, I'm gonna go over some key information that is new for the week, of course. So let's start there. So our weekly market overview, starting off with July 2019. Of course, I'm looking at the Euro USD. Whatever pair you look at, just kind of find do the research and find the information that's relevant to that specific pair that you focused on. So the EXY as of today at 2:25 p.m. It was below 20%, and the DXY was above 20, or was at 24% positive. So in theory, the euro was weak and the euro was weak and the dollar was strong. Now, hang on, guys, 1 second. Sorry about that. So, as I was saying before, so no matter what pair it is that you're focusing on, make sure that you take this template for this data sheet because it's going to enable you to know exactly how to create your own. I'm going to go through my personal data sheet that we just kind of put together today and show you guys exactly how I did that. But I'm not going to go into full detail. I'm going to give you guys a little overview. And they go to King of the fundamentals right there, Mr. Jason King. There you go. This the golden. This here is going to really help you guys out because I know it's been a lot of confusion in the group when you guys see these data sheets coming out, don't know how to read them, how to respond to them. So what I'm going to do is to make it really easy for you so that way you know exactly what it is that you're looking at. You may not know how to create one yourself first, but as long as you can interpret the information, you should be fine. So let's start off with the first step of this data sheet. The first step is that index. Okay, what I'm doing with that index here, obviously, as you guys know, that index is allowing us to create a bias. So I'm going to take that index price, whatever the current price is, and I'm actually update this data sheet. Now, the thing with data sheets is this is you tracking the data for the entire month. Okay, so from the beginning to the end of the month. And what you'll notice is that it's going to help you out a lot when the new month begins. Because during the new month, you never have one currency stronger or weaker than the other. They're usually about equal to. So therefore, it's a little bit harder for you to gauge which way the direction of the market is going. So I'm going to go here and I'm going to literally just copy this price level here, or this currency price. Okay, and I'm going to go over to my data sheet. So yours is going to look just like this. I'm going to make it look just like how yours is going to look, completely empty. And the only thing you got to do is literally copy and paste, fill it in. And a lot of my, personal students, they know they didn't even have this luxury of having just to copy and paste. Everything was literally from scratch. You had to type it all out yourself. So y'all got a little luxury here. So the only thing I'm doing is pasting that. All right. Once I have this price paste, what you have to realize is the rules still apply here. Your index has to be above or below 10% for it to be indicating the true trend, okay? So right now we got a negative 0.1%. Now the next thing I'm doing here is I'm dating the time and date that I looked at this specific currency index, just so I can gauge the price difference as the month goes on. It's gonna make it a lot easier for me to understand if prices increase or decrease. I'm going to show you guys a complete data sheet as well once I finish. So I'm going to check at I'm going to look at the EXY now. Type in the EXY. And the only reason that I'm doing EXY and DXY is because I'm trading Euro USD. So whatever pair that you're trading, that's what you want to focus on, those specific currency indexes. Now, what's going to make this group a lot better is when everybody starts to do data sheets for different currency pairs. Okay. It's going to enable us to keep our eyes on every single pair. It's going to enable us to really know and gauge what exactly is going on. So once everybody, like I say, starts to get familiar with this stuff, everybody should be posting data sheets in the group every single Monday. Okay, so it should be a data sheet posted in that group every Monday, updated. I know a few people, for instance, Anil, every week she posts a data sheet inside the group. I know it's hard for some of you guys to read it and understand it, but that's totally fine. You guys will get it after this. So now I have the EXY. Okay, I'm gonna type in the date, okay, along with the time that I've checked that EXY. Every time I check, you know, either the index or whatever it is, I'm making sure that I timestamp it. That timestamp is very, very important, okay, because it's going to allow you to see the difference over time. All right, so now the next step that I'm going into is volume. I want to know how much volume is in the chart, is in a current market, okay? So how I do that is I go over to my indicators, type in volume here. You'll see it right there. Then you get these little bars at the bottom. These are volume bars, okay? Now, if you don't understand volume by this point, you need to go back on YouTube and watch the video from last week, okay? Watch the video that we did last week, speaking about volume, speaking about the rules of the market, and you'll understand that volume aspect a little bit better. So in theory, what I'm looking at here is this volume here. I want to keep track of that. So on the 1 hour chart, this volume is positive 2K, so positive 2K volume. So what I'm gonna do here is this. I'm gonna go over to volume, okay? Type bullish because that's clearly what it was. It just kind of jumped down on me, but I'm gonna leave it for what it is. I'm gonna take it for face value. Or let's see what you're gonna do. All right, it ain't always that way, but obviously this price flipped. So instead of being bullish, I'm gonna have to do bearish. And look at these guys. Damn. All right, you know what? Screw them. We going with what we said the first time, which is gonna be bullish. If anything changes, whatever. The smaller time frame will allow us to see it, see that fluctuation a little better as well. So I'm gonna just leave this here for now. I'll type bullish 1 hour. This is the 1 hour chart that I'm looking at the volume on. 1 hour chart. And the volume, bullish volume, 2.1K, and time dated 0.7-115-2019, and the time is 7:56 p.m. Fill those in right quick. All right. Now, I'm going to do the same thing. I'm going to go over to the 15-minute chart. And you know what? I'm not going to play with them. If they're going to say bearish, I'm going to say bearish. I ain't going to play with them. I'm going to take it for what it is. All right. So the 15-minute chart, on the other hand, is also saying bearish as well, but it's obviously we're going into we ended our Sydney session as well, so you're going to see some crazy fluctuation there, so, but that's totally fine. All right, put a little dash here. Put a little dash here. And this is the 15-minute chart. Throw your date in, 07/15/2019. So if you guys are smart, you'll be following along with me and just filling it in. So that way you can get some hands-on experience. All right, so that's the volume. Now the next thing I want to do is you can go into your search bar, and what you're going to type in is open position ratio. You're going to look for Owanda, it's a U.S. regulated broker, okay? Now Owanda is going to give you some percentages. The percentages are showing you how many open buyers and sellers there are for each particular currency pair. I'll send these links in the group later on once we get off this webinar, so you can have those direct links as well. Then I'm gonna go back over to my data sheet. Right under where it says open position ratio, what do? Timestamp it, okay? First thing first, I'm gonna timestamp it, 2019, the time, 7:58 p.m. And then next thing I'm gonna do is just click paste. So the sellers, it's always going to be the first number, and the buyers will always be the second number. Okay, first 3 steps finished. So you guys should be able to read that first part, right? Very, very easy, straight to the point. Now, the next part is a little bit more challenging. So make sure you pay attention. I'm not going to do a full month's worth or even 15 days worth. I'm going to just do like 2 or 3, and then I'll go over one that's already completed, so you guys can see one that's finished and one that's a little bit more overwhelming. Do we delete our old DXY and EXY reading? No. So you never delete anything. You're going to make sure that all you're doing is adding to. So what I would do, Mandeep, since yours is, since you kind of are, we already went over this once, I'm going to kind of show you exactly where to put this information. So since this was an updated one, I would put it in my original data sheet. So no matter what, all I'm doing is adding to it, as so. So price has literally changed just a little bit since the last time we looked at it, Mandeep, earlier today. So all you're doing is updating, okay? I just wanted to show you guys one from scratch real quick, but you never delete, never, ever, 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 ever delete anything. And I'll show you guys data sheets from a little while ago as well, some complete data sheets. Yeah, so let's do that. So again, Mandeep, just be sure to fill it in, and everybody just fill in the information. And that's the same thing for all of the information. So since I've just checked my volume again, this information is relevant as well. Okay, you guys don't have one. You guys don't have this previous info, so don't worry about trying to do it. Do this what I'm doing right now. I just want to fill it in, so I don't have to do it later. Okay, open position ratio. I do the same thing. Fill that information in. Go back to my original. So every time you check the open position ratio, every time you check volume, every time you check everything, be sure to add it to the data sheet, okay? The data sheet is using facts. This is all the factual data that you're gonna need, okay? That's gonna help you confirm or disconfirm your bias. So let's start here. Let's start here. Okay, yeah, so Mandeep gave you guys a updated version of the data sheet as well. It's not complete because that's how Zoom does it when you send stuff through the chat, so it's fine. Mandeep, you can post it in the Financial Alchemy Pro group too, so they can see it, because they won't be able to see the whole thing. Okay, so now the next step of you creating your new data sheet is the events. Okay, you got to use the events to your advantage. You got to learn to count each event. So the way that this works is a simple mathematical principle that you learned in math: greater than, equal to, less than. Okay, but in all reality, we only want to focus on greater than or less than. So with economics, you get both a positive and a negative result. You should never be trying to guess and predict economics. It's already going to give you a positive or a negative result. So only job you have to do is open up Global Economic Calendar. Okay, and you guys should have, you have this information as well on that Financial Alchemy Pro DVD as well. So you click on filters, click on USD or whatever currency that you wanted to look at. Okay, you start from the beginning. You start at the beginning of every month. Okay, so in this case, July 1st. Now, what do you do here? You identify the positive and the negative results. But this is the thing about this positive and negative numbers. It's based off of the middle number. This forecast is very important. Previous is only important if there's no forecast, okay? Now, I'm gonna show you exactly how to interpret this information. You might not know what USD market, US manufacturing PMI even is. So only thing you gotta do is highlight, right click, search Google, and you only want to use investing.com. Okay, you don't want the information anywhere else, just from investing.com. Investing.com is going to break down this information to you clearly. It's going to tell you exactly what the event is, how to interpret the event, if the event is positive or negative. Okay, so the thing about this is the keywords are important. So I'm going to highlight this down here. This is telling you exactly how to react to that event. A higher than expected, okay? So it's not saying higher than previous, it's higher than expected. That's the key word here. So the expectation or the forecast. So that number, is this number higher than what they forecasted or what they expected? Yes. Therefore, it's a positive. Now, with anything that you see ISM or USD market, manufacturing, employment, price paid, new orders, all of those things are based off of the value greater than or less than 50. So if this number was below 50, it's going to automatically be negative. Okay, no matter if what they predicted was below 50 or not, blah, 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 it's going to automatically be negative. How do I know that? Well, if you don't know something about the event, what should you do? Copy it, right click, search Google. Okay, click on investing.com. You don't want to go any other sites. Now, what does it say? The Manufacturing and Purchase Managers Index measures the activity level of purchasing managers. Now, this is the important part in the manufacturing sector. A reading above 50 indicates expansion in the sector. Below 50 indicates contraction. Traders watch the surveys closely as purchasing managers usually have early access to the data about their companies. Okay, so that's simple. That's how you find that information if you don't understand it. So what do? We tally. Okay, so you're going to have a little graph like this, positive and negative graph for each currency. Is this event positive? Yes, tally 1. Is this event positive? Yes, tally 2. Is this event positive? Yes, tally 3. Is this event positive? No, that's a negative. Tally 1. Is this event positive? No, that's a negative. Tally 1. Is this event positive? Nope, that's a negative. Tally 1. There's only one rule I want you to remember. If the number is previous to what it was before, do not count it. I repeat, if the number is previous to what it was before, do not count it. You are going to throw off your entire data sheet if you do, okay? So don't count that information. So that's day 1. Now, how would day 1 look on this chart? Now, remember, guys, I'm not going to do a whole 30 days or anything like that. Just give you an example. So this is the US dollar. I have 3 positives and 3 negatives. What do? 3, 3. Now, is the dollar strong or weak? We don't know yet. There's no direction yet. This is why you need the previous month's data sheet. So once you finish out this month, it's going to even help you out with August. So for example, we got -3 and +3. That's it. They didn't give us anything, okay? But if I go to June, look at my June, okay? Look at my June. Everything is tracked. Everything is tracked. So what I'm gonna be looking from y'all every single Monday, okay, is for you guys to post these data sheets. If you're not posting data sheets, it's gonna be an issue. I don't know what the issue gonna be yet, but it's gonna be one. All right, so just keep track of the information. That's the very vital thing to remember, is to really focus on keeping track of all the information. So if I go back down to the US dollar, now this was the end of the month, right, for June. Oh, well, I actually added it. See, this is a perfect example. So this was my June, but I calculated July with it as well, for the simple fact that I didn't have enough data. I didn't have enough data to classify direction yet. But if I use my previous months along with the current months, it allows me to understand that, hey, that dollar is weak, right? On the second day in the month, I already know the dollar is weak, okay? And I can do the same thing for the euro, which it actually did change just a bit. But I could have done the same thing for it. That euro was weak. So this was basically the market was moving sideways. So it helps you compare, okay? Another thing that is going to help you do, this data sheet is really going to help you understand. It's going to help you understand if that actual currency is strong or weak. So the beginning of June, 6/4/2019, that currency was 112.4. By the end of June, that currency is 112.8. That's obvious increase. But look what your index says. It says negative. How long is that going to last? Might not last that long, okay? Because we can see the difference from the beginning of the month till now. It's still increased, okay? It's still high numbers from what it previously was. Same thing for the US dollar. If you look at the US dollar, If you take a look at the US dollar, it started off at 97.27 and we ended at 96.84. That dollar has decreased, okay? It's obvious. So what happened to Euro USD last week? Or not last week, 2 weeks ago, I made $8,000 in literally 3 days from this shit right here. From this shit right here, this data sheet. Me looking at this data sheet, understanding the direction, understanding that, hey, this euro is weak, or hey, this euro is strong, and hey, this dollar is weak. We might be able to see something, or vice versa, okay? Now, it's different things kind of take place within the economy that causes the price to fluctuate, okay? But it doesn't mean that that price is stable, because what's the one thing that we know about price? It can't be confirmed at any particular point in time. There's no way to confirm price, okay, without events in time, okay? Without events in time is the only way to confirm price. So who knows how to read a data sheet now? Type a Y in the chat right now if you know how to use a data sheet. Y means yes, N means no. So everybody type a Y or an N in the chat. So that way I know who I need to work with. That way I know who understands this and who I should be expecting data sheets from. So everybody type away in the chat. There we go. There we go. Tyleek, Matt, that's a Y, that's a Y. Mandeep, that's a Y. Come on, we missing 9 more. Everybody. So type yes if you understand how to read data sheets, and type no if you still don't understand how to read data sheets. So yes or no. Tyleek is good. Matt's good. Mandeep good. My boy Jay good. I already knew it. Who else? Who else? Where everybody at? Anel, Bernard, Don, Jared, Rosalinda, TJ. Y'all understand data sheets? Good. Okay, Bernard got it. Good. Okay, Jared, good. All right. All right, so if you still don't get it at this point, only thing you have to do is just take some time, to rewatch this video, of course, and it's going to explain a little bit more to you. Now, or not explain more to you, but you'll be able to pick up more from what I just said. So now that we got that down packed and kind of established, solidified, and overall confirmed, let's jump into the last aspect of what I want to talk to you guys about, of course, is our framework. The framework is very, very important, okay? The framework, it allows you to understand clearly what's going on, okay? Damn, look at that drop. Okay, where is it? Cool. All right. So what I want to do is I'm not gonna go too in deep depth with this. I'm gonna just do the first half, and I'm gonna speak about volume just one more time. So the root variables for this overall thesis are the x and y axis. The x variable is considered the unknown, and the y variable is considered the known. Okay, this is a concept that reflexivity is a concept that was created by George Soros. As we know, George Soros is the only person to make over $1 billion in one day trading Forex. Okay. What the human phenomenon is, the HP is to react to what you see in the markets. You never predict, you only react, okay? An example is traffic lights. But before I get into traffic lights, if you didn't understand that yellow means slow down, green means go, and red means stop, you'd probably be dead by now. So the thing about it is you learn the rules before you start to drive. And that's the same thing about Forex. You have to learn the rules first. So that's what this framework does. It explains the rules to you in a way that you should be able to digest and completely understand how our strategy works overall. But again, I'm not going into detail at all. I'm just go briefly so you guys can kind of have those small epiphanies. So when you're driving your car and the traffic light turns yellow, you begin to slow down, which is the basic reaction to what you see. Not only to what you see, but to what you already know. You knew the rule. You knew green means go, red means stop, yellow means slow down. The natural phenomenon, the NP, is when the direction becomes obvious in the markets. The same traffic light is now red. You've made a complete stop because it's obvious that the traffic flow stopped completely, right? It's obvious that the traffic flow stopped completely, okay? Remember that. Natural phenomenon is obvious. Human phenomenon is to react. Everyone works in the human phenomenon, no matter who you are, okay? Now, the currency markets The currency market movement is based off of fluctuation of price and the expectations of other traders. The direction that the traders see the market currently going in is what they expect to continue to happen, not realizing that the markets are self-fulfilling if you predict, there we go, or if you assume or do anything instead of reacting. It can become self-fulfilling, and what you'll do is you're going to relate everything to why you're right. In that there is no equilibrium within the markets because there's no perfect competition, because there are no actual buyers and sellers of anything. The words buy and sell in the currency markets mean up and down, which therefore show you direction and not supply and demand. Since everyone's expectations are different, price fluctuates. And what I mean by that is that if the expectations were one and the same and everyone had the same expectations within the markets, like I always tell my one-on-one personal students, is you would have one line that can go straight up and down. Since price fluctuates, it looks as so. Now, this line that went straight up and down, it would be easy to find the equilibrium. Since that's not the case, we have to create a trap, okay? That trap is what we call as support and resistance. So let's jump into that. What I'm gonna do and how I'm gonna tie this up here is I'm just gonna show you the trap. As the weeks go on, you'll learn more and more about why and how the strategy works. The reason why I want you to know why and how the strategy works is because it's gonna enable you to really become profitable and add to it, okay? Add to the current strategy. So that way you can make it your own, basically. You can make it so that you can clearly follow those simple rules. So we talked about price fluctuation. And if the markets didn't fluctuate in price, we would have this straight line, right? Okay. So if the markets didn't fluctuate in price, we'll have that straight line. Now, since the markets do fluctuate in price, that straight line, since the markets do fluctuate in price, we have to create a trap, okay, between that fluctuation of price. Because if we didn't, let's say, and the market did move straight up and down, the middle would be the equilibrium, right? That would generally be your equilibrium, but that's not the case. So what we have to do is we have to create an equilibrium by trapping the market between its ranges high and its ranges low, okay? That's the trap, okay? That's the first trap. Now, the next step of that trap is the 38.2 zone. Now, Mandeep, what did that 38.2 zone do for us? What does it do? What does it give us? You can just type it in the chat. I'm gonna ask you because we just spoke about it. So what did that 38.2 do for you once you created that trap? Give them a second to reply. Yeah, I'm calling you out, G. Just one time for the one time. Let them know. There we go, our equilibrium. The 38.2 zone creates the equilibrium for you, okay? Now, this is where the market has the 50-50 odds, or this is where your best odds are to either buy or sell, okay? But the way that we realize the best direction is a concept that we use called active and pause, okay? And the way the active and pause works is kind of like chess. Each move sets up the next move, okay? Now, we have to look at the consecutive candlestick aspect of it all. So in this case, I got 3 consecutive candlesticks going up. My active move is bullish. 3 consecutive candlesticks going down. My pause move is bearish. So what that means is the next time the market hits this 38.2 zone here, we would be buying it, okay? That would be a good point for us to buy. And simply because the market already retraced and now it's on its way back up. That leads into my third and final concept of tonight, and that's market structure, okay? Market structure goes up, down, then what? Back up, right? What do you see here? Up, down, then what? Back up. So it enables you to intercept the market structure, enables you to be in a good enough position to where you should be able to see some sort of capitalization over it all. But again, I hope you guys really understood what I talked about tonight. Next week, we're gonna go into the next step, okay, which is the triggers, more triggers. And what I'll be doing each session, as you guys starting to see, is I'm elaborating just a little bit more so that you can have a little more clearer understanding on what it is that you're doing, why it is that you're studying this strategy to, so hard and so strong. Okay. Another thing that I want to end you guys kind of with is the website has some updates going on. I'm going to relaunch it, or not relaunch it. I'm going to allow you guys to have access to it again by midnight tonight. I just want to do a few more tweaks and stuff to it, just kind of make it a little more user-friendly and accessible for you guys. So I know everybody on here should have access to Financial Alchemy Pro already. If you don't, reach out to me. Mandeep, I got you. I already know you. And we'll get you guys situated. But I'm going to open up for any questions that you guys may have about anything that I talked about tonight. Let me go ahead and end this recording real quick. So we can